Hi, I'm Ross from Coombe Smith 150 Group Property Accountants. I'm just going to go through a few real simple money smart examples today and just go through a couple of little things that you could look at doing. These are really simple. They're a little bit around the new tax rules and a couple of smart things you can do. So hopefully they'll just help you a little bit and just get you, thinking a little bit different. Basic information for these people. Let's say it's a couple. A couple have got their personal house, and they've got it in a trust. So generally you set up a trust for asset protection. So they've obviously thought that worried about how they're going to pass their assets on to the children in the future, or they've got sort of some sort of business risk or something like that. So they're looking at asset protection. They've got some shares worth 500,000, and they've got an older residential property worth $1 million with 400,000 debt. So what's the simple things that we look at first? The first thing I would look at is, hey, why not put the shares into a trust? You've got a trust set up. You've obviously set it up for a reason. Often the shares would just be sitting in personal names or something like that. If you move them into the trust, one, they're then giving asset protection. You obviously need to consider gifting and things like that and doing the whole process. But yeah, if done correctly, you've then got asset protection. The profit or loss from those shares would then flow through to the trust. So if you had someone earning a lower income, you could then distribute all that profit from the trust out to that one person on a lower tax rate. So having the shares in a trust can be very tax effective long term. You can distribute income to children or other beneficiaries, to lower income earners, charities, gives you heaps of different options. So really good and flexible from a tax point of view. And it's just something we see it all the time, that people do have a trust, but they don't have a lot of their assets and things in. So they've done half the job of asset protection, but not utilized the full structure that they've got. They've spent all the money, but not utilizing it. So that's one simple idea. The second one, hey, if we borrow to buy shares, the interest is going to be tax deductible. Whereas with the residential property, if it was recently purchased after 27th of March 21, it's going to have no interest deduction from the 1st of October 21, which is just around the corner. Or if it's purchased before that and it's an older property, we're going to lose interest deduction over the next 4 years. So what about if we sell some shares? And make sure you get advice, make sure you're happy to do them, double check there's no tax consequences from that. But normally if you're selling shares, as long as you're not a trader, that would normally be a tax-free gain. There's not a bright line or anything like that for shares. So if you sold some shares, you use the cash. So you sold 400,000 of shares, used the cash, repaid the residential debt for 400,000. Then if you borrowed again, borrow 400,000, it could be secured over the residential rental or your personal house or whatever. And then so buy some more shares. Now you've borrowed 400,000 to buy shares. So that interest would be tax deductible. So this little swap around of basically moving from having the debt on the residential to having the debt on the shares, that would save you 3,000 a year. So all I'm looking at doing is swapping. At the moment, the shares just in personal name, no debt. And you've got the older residential with debt. So we're looking selling some of those, pay off this debt, borrow to buy some more shares. So you've still got 500,000 of shares at the end of it. Then it's fully tax deductible, all that debt, saving 3,000 a year in interest. So obviously seek advice, be very careful how you do it. You don't want to buy the shares and then them suddenly jump up in value and you lose hundreds of thousands of dollars. But there is different things that you can think about there. And there's some really easy options. A lot of those sort of options, if you talk to your broker and things, really simple, really easy to set up, not a lot of cost. So maybe that's something that will work well for you. If you're wanting to do things like this, really good starting points, just have a free chat with me or one of our team, and I'll chuck the link in the bottom in the comments. Thanks a lot. Bye.